points on the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then it feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, I got your watch list coming in at February 11, 2022, and the stock market is going to go even crazier tomorrow. Today was a very wild day. It did not start off that bad. You did have the CPI report, and I'm sure, as you know, inflation is already going crazy. Surprisingly, it wasn't that bad of a miss, but I have to keep this chart up. This is the S&P overlaid with TLT, and this isn't even the big point, but you could already see a big divergence. We've been talking about it. We are going to talk about it here today, but I also want to just cover what happened and led to this movement, because it was bonds, CPI, you got to hear from the Fed, and there was just a bunch of other pieces of news. But now the Fed futures and what is being priced in, it is putting us in a very interesting scenario. Again, we are in the middle of volatility, and even after yesterday's gap up, you came right back down, and now the market is really waiting for something. So we got a lot to talk about. I'm going to go over everything that happened in the market today. I'm going to go over the plays that I made, and I did make a couple of short plays, but I do have 3 different stocks to look at just in case the market goes down tomorrow. But like I'm saying, it could have been a lot worse today, so it's really not hit that point where it's like, oh my gosh, we're as freaked out as we were a couple weeks ago. But the fact is, a couple weeks ago was scary, so we're still going to be paranoid. So we got a lot to talk about. I'm going to go over all of that, and yeah, that's pretty much it. So and then the SPY really started to catch up with bonds. That would have been bad, but that is also what we need to keep our eye out for. So that's the first part, but now, sadly, we are probably going to have to wait till the next catalyst comes to really see what's going on in the market. Again, I'm going to talk about the divergence here with bonds and really how it creates this opportunity, but the point is it going to move right now, or are we going to need a catalyst? And yes, you do have a catalyst coming up next week, but as far as even today and why it was good and bad, one, it was bad because of all the news, and it was really just a 1-2 punch. It started out with the CPI, and that was bad, but then when Bullard came on, that's when the real drama started. Literally, we gapped down, and it was a very big gap down compared to yesterday, but right at the open, we just shot up, and you could see here at VWAP, all of this started right when Fed Bullard spoke, and that's even tying it into everything. Even in the morning after the CPI, the Fed futures were already clapped. The Fed futures and pricing in, it already went up high after the CPI, but then once you even got Bullard, it kept going lower, and even then the market started to follow. So it was 2 things that were pretty bad. Not only did you have the CPI, I think we could have withstood it without going too crazy, but then Bullard on top of it, that was just 2 bad things in a row, and that's where I'm saying now this could also be the good part in the next coming days, simply because if there is no bad news or nothing new, no more bad Fed speakers or anything like that, then the market may get some stability and not break the levels. But if it breaks the levels, we will be clapped. But like we said, it was all about the CPI, and then Bullard today, that really messed things up. But now the rate hike odds, and this is your first pretty picture. You could literally see it. This is the curve. The dotted line is what the Fed is pricing in. This is their plot and where they think the rates are going to go and how it's going to be. This is literally the Fed Fed dot plot, but now what you see here in blue, this was this morning before the CPI report, and then after, you could see it here in the orange. This is how much the Fed futures move. So that chart we always put up here, it's the same thing. It's just showing you as a curve. And now what ended up happening is that half a basis point, that is the big story. Once again, the difference is the market is not getting clapped on the talks or pricing in just yet. That's what we need to wait for. But essentially, this was the other big part. And now as we move forward, this is what everyone's going to talk about, because now you fully have 6 rate hikes priced in December after this. But now even on the short term in March, it is pricing a double hike. Again, you're going to hear this a lot. I just want you to get it. This is the divergence. This is the Fed futures for December. You could even go to May or March, the short term. It doesn't really matter. But again, you see how aggressive March is. But we've been using December a lot here, but what you got to realize, this right here is February 1st, the beginning of the month. Look at what happened. The Fed futures and bonds yields have been going up, and people have been pricing in way more Fed hikes, but the stock market stayed up. It eventually was following this, and now this is that divergence we're talking about. But if you want to keep it simple, we'll go back to the OG chart, and this is now the problem. Again, I've showed you this chart, but remember, it was a lot lower. The market is literally pricing in 93% chance of a double hike. So again, last time you saw that, even recently, the market, that was a no-no. We were down here. It was in the middle of this. This was when those first fears came there. So that's what you have to really keep in mind. But this is going to be the new topic from now on. People are going to be saying, well, dang, I think we're going to get a double point hike. All the economists, everything else. And now you even had Fed Bullard today. He is the one who said that, and he said it's up to Powell. So he kind of said, yeah, we need it, but we'll let Powell make the decision. And now go back to what happened with the last Fed meeting, especially if you've been following along. Hopefully this feels like a giant big story. Remember, Powell is willing to respond to the market. That's kind of the signal he gave. Even some analysts are saying that's why the market didn't really go down too much, and that's what we're going to look for. Some people kind of feel like Bullard knew what he was doing, and he knows if he says that, the Fed futures are going to price it, so he's kind of trying to influence it. That's what some people said. But the main point you got to realize, and this is where now opportunity and a lot of confusion will come into play, those Fed futures are for March. Today is the beginning or the middle of February, so those Fed futures can fluctuate. Essentially, come the day before the Fed meeting, if that's pricing in a guaranteed double hike, and then the day before it drops below 60% and comes back up, that means nothing will happen. So that's really the key with it, and we really now need to focus on, okay, how does the market respond to these expectations, especially if they start running wild. So that's like the first pretty picture mixed in with everything else. But as far as the next catalyst and what we're going to get from here, you're going to get the Fed minutes next week. That is going to be important. And if we get any more Fed speakers, you saw what Bullard did today, that could cause a lot of things. But now, like I just said, the real key is going to be in the divergence. What today showed us, if anything, is that the market can be chill with 50 basis points for a little bit. That's what I was just saying, where it's like, okay, we need to watch how the stocks react, because clearly it's not doing what it did 2 weeks ago, but we're going to need time to play out. But essentially, we want to be watching what happens with bonds. And now this is what I'm looking for. The real big warning is going to be if the bonds keep going down, if bond yields TLT keeps going down, bond yields rise. That means bonds are going down, and then you even see the Fed futures, they start pricing more and more, but then stocks kind of stay the same or go slightly up. That would actually be the warning, because again, once the divergence gets big enough, it's going to start having a pull on the other assets. So that's what we're watching out for. It may be a lot. Please come on stream and ask me about this. Watch the other videos. We've been talking about this, but I really do think this is about to get important, and especially if you've been watching the other videos, you're kind of seeing this come to life, and that's why now the next few days are going to be crazy. But as far as the company news and events, I'm going to start here with James Bullard. Again, this is what he said. He said that the Fed should raise rates by 100 basis points over the next 3 meetings, and that would literally involve half a basis point in March and then a quarter point at the next 2, but he did say it is up to Powell. So literally, he came out with this interview. A lot of it was in writing, and it was just very, very hawkish. Again, Bullard Bullard can be very hawkish, and there was a lot of analysis behind this, but essentially he is advocating now a 50 basis point hike. Every other Fed member, again, some of the positive stuff we've gotten over the last few days, it was a lot of Fed members saying, nah, we're not going to do that, and now you saw what it did to the Fed futures, so essentially there will be a lot of volatility between the bonds and stocks, and that's what we're waiting for. But now, any other Fed speakers, it will be key to watch. But that was the first big piece of news. You really saw it affect the market. Then we had a firm. This one was crazy today. I made really, really small plays. And again, I think I did it twice today. It was with the Affirm news and the Uber ones, but I literally did like next week plays with like $5 or $10 contracts. Literally, I'd buy like 3 or 4 of the 5-cent contracts. We kept them very, very small, but this one was crazy throughout the day. Essentially, Affirm's earnings got leaked on their Twitter. There was a Twitter post, and they're like, we're happy to announce another profitable quarter and all of that. And then people were like, wait, what's happening? They deleted the tweet. Stock started to move up as the rumor got out there. Then eventually, a couple hours later, they just released the numbers, and then the guidance came out. It was bad. Stock started moving, but that was a big deal today. And then Uber, this one was wild. I mean, it's even hard. They literally gave better, worse guidance. So remember, they had earnings yesterday. They beat on a lot of numbers, but their guidance really wasn't hot. The stock was up. Middle of the day today, out of nowhere, they had Investor Day, but they halted the stock pending news. And then the CFO was giving all this guidance, and they were saying, we're going to make $26 billion, $6 billion EBITDA. It sounded really, really crazy, and it sounded good, but then it pretty much concluded with all of those numbers are the same exact growth rate that Uber has been exhibiting over the last like 3 or 4 years. So it turned into a dud right there. The stock started selling off. That's why we even played Lyft as a sympathy. A lot of people were like, wait, why did they halt this? So that one was very interesting. That was a big piece of news. And then Ford, this led to a little bounce before the market sold off, but they announced 6 new EV models through the Lincoln brand. So that was good. I think they're even working on some other ones. We may even get some other EV announcements from Ford on new models and lineups. I really wouldn't be surprised on that. So be on the lookout for that. And then we got updates on the Fed stress tests for June. That's when they're going to be doing it, but they released the criteria today, and it assumes a 10% unemployment rate and a 40% drop in commercial real estate prices. So we'll see coming June, but everybody's saying real estate good crash. The Fed's saying, can the banks handle it? It's good. It's good. And then finally, this one, it kind of sucks because it was their first like real commercial launch. Astra, the stock started plunging. We watched this live on stream. They launched their first commercial payload, and they actually had customers. I did not know that. One of them was even NASA. They were supposed to deliver stuff, but it ended up failing, and they said like something decoupled. I don't know about space stuff, but stock moved on that. Their biggest one-day move, but kind of had a lot of eyes on there today, so that was fun. But that was pretty much it. It was very straightforward. The next few days, it will be straightforward but confusing. It's literally going to be about, does volatility return, and how do equities react to bonds, or do the bonds even start screaming something for us that would even make the markets have to react? So that's what we're going to be looking for. It's going to be exciting, so I hope you're ready. But that is pretty much it. So let us get into the plays. So right off the bat, I got 3 or 4 stocks that I'm looking at coming into tomorrow. I have 3 different plays for the downside, but then I have one that we may be able to look at for the upside. But the first one, Tesla, I grabbed puts today. We grabbed 2 sets. They both did very good. I went with the short term with February 18th, and then I went for a March. I'll show you when we get to the chart. But the thing I like about Tesla, it has held up very, very good. And in a weird way, it is now kind of cheaper than the VIX. And why do I say that? I played those UVXYs from yesterday, and those premiums were very, very weird in the morning. This morning, off of the gap down, they did not go up. And a lot of people thought I was tripping on it. But one thing that's really, really happened, if you don't remember during all of this, how has it played out throughout most of this one a couple weeks ago? It was literally, if it gapped in your favor, literally you got puts, it gapped up. That's where you got your 50%, 100%. Then throughout the day, it would kind of sell off with the volatility, and then you'd wind up with a lot less. Today, it was very different because we had such a big gap down, but the puts were only up like 10 or 20%, and then they stayed up even though we bounced. But then right here after this event, that is when they started going up like 40-50%. So it was pretty wild, and I think it even says something. It kind of gave me a signal we're going to look after. But what I'm saying, even though the Teslas went up, the UVXY calls now, even on the short term, some of them are up about 200%, but at one point we were up about 150%, and I even think the Tesla plays, even far at the money close, they were only up around like 50 or 60 at the time. So keep that one in mind, but I did make 2 plays, and this is what I'm going to be looking at tomorrow. I may play it a couple times, and we still have some old ones. I still have some that are even clapped from earnings, so we'll see how those play out. But as far as the 2 plays, the first one that I grabbed, I went with the February 18th, or this one was the second one. I started with a March, but my E-Trade, it stopped loading up here, so we're going to go to the TD Ameritrade chart. It's a little bit harder to read here, but I started the morning with the March 710. This one had a little bit more time. I grabbed one of them for $700. Again, it was pretty much the lowest price since some of the earnings there, and I was very surprised this morning because, again, the bonds were very, very low, but the market was holding up. I said, okay, maybe around European close, and just in general, after looking at the UVXY puts, the Tesla ones were cheaper, so I said, okay, we'll get some time. They ended up going around like $9 there, and then I went to the second one. The option loads up here, but you could see, so pretty much after I got the first one, and those were early in the morning, so then as it was kind of going up, they came down, and I went for the weeklies. I grabbed another one here, just one of the 770 puts for next week for $100, and then that one was able to shoot up, but like I'm saying, it was just cheaper than the VIX, and it's a growth play, but we'll see, because in a weird way, though, they have a little bit more strength, and that is kind of now the problem. We're going to talk about it, but that is the first play coming into the second play, and this is what I mean. We're going to talk about it. Facebook is kind of like Tesla, where I'm saying whether it has a lot of strength or a lot of weakness, I like the Facebook one, but it's in a very interesting position for any downside because, again, it has already taken a big brunt of the loss. So that's kind of the worry, because sometimes you've seen it before when the stock market gets killed. Some of the companies that were already killed, they won't do anything, and they'll kind of just chill at this low level and kind of set a floor. So that's what I'm worried about with Facebook, but I am going to look at it because some of those longer dated puts, they're about the same prices when we got them on earnings, and some of them are still down pretty big considering what's going on. So I will be looking at plays tomorrow on Facebook on the short term, kind of how I played Tesla today. If we get the opportunity and we see it's willing to move below that 220, there could be an opportunity. We know there's already weakness, but the question is, did the market sell off Facebook before everything else? Well, we will find out, but that is the second one. I'm still holding those other June ones from the beginning of the week here, or last week with their earnings. They're about break even, or I think like down like 10%. They were up like 30 or 20% the other day, so kind of holding their price. They have time, and that's what even kind of gave me a signal there. But there is that, and then Ford, that is the final downside play. Again, I'm still holding those from yesterday. They went up 30%, and why I say Ford, you could get some of the market volatility, but also everything going on with some of the auto delays. I think that one, we may hear about it a little bit more next week, so it's kind of a double whammy. But then for the upside, I made a play on this one. I got clapped, but I did keep them small today. I kept my earnings play small. I put $150 on Disney. Remember, we cashed out like $400 or $600 just off the pre-earnings for it. We had that other April, and those actually ended up holding up, which was good. But I went for a Disney continuation, and essentially, man, it just reminded me a lot of Microsoft earnings, where you buy one of the contracts and it really got clapped. They did kind of come back a little bit, but it was like Microsoft. I think it's going to be choppy, but kind of wait for a delayed reaction. If this one comes back, I think this one could be very, very good. So definitely going to be keeping my eyes out on them. But those were the main plays. As far as everything else, I only made the Tesla plays. I held a lot of the puts from yesterday. I did go with a JP Morgan in the morning, and I would keep your eyes on this even after everything today, even the play from the morning. I think I even bought it when the stock was up a little bit more. Those only went down 5%. I kept it small, around $200. I went with the March 175 calls at like 40 cents a pop, but that was the first play. And then every other play that I made like a $30 play on a firm February 18th, and we were playing the news when it came out. I said, okay, that one might be a good one, and I will be watching this tomorrow. Again, we got it very early here, and there was a run-up. They went up even 1,000% at one point. Or no, excuse me, that one was the Lyft, and that was the other play. I put another like $10 on Lyft. Both of these plays either put like $30 or $10, literally like $30. I'm talking 5 cent contracts, 1 cent, all of that. And then I did go for a February Disney as the continuation, put 150, but those dropped about like 10%. So in a weird way, some of the earnings fails, they weren't bad, but at one point to the day, it looked pretty bad, but they ended up closing pretty decent. But those were the only other plays. For tomorrow, I'm going to be watching Roblo. Those plays are even up about 80% today. They still were able to hold. Airbnb did very good. You even had Expedia earnings, and I'd watch for the continuation, but Airbnb was like really, really on fire. It's not saying it's negative, but they were positive, and now with Expedia doing good, they may get a little bit more of that liftoff, but a lot of the premiums are starting to wake back up. So we made those contracts free. I'm still holding those. I'm holding those even till next week. I want a little bit more of the pre-earnings run up. If it does go down from here, this could have been it. So be careful with that. We'll see what the market does. We will be at its mercy. And then Zillow, they killed it. Looks like they made a lot more than expected, and the negative of their home flipping business that brought them down, well, they've just been selling houses into a very hot market, and it's been kind of very good for them. So watch them tomorrow. There could be some good continuations. Expedia, like we said, watch oil if this comes down again. This could weigh a little bit on the market. I'm going to be watching. There could be some potential plays, so that'll be interesting. Zendesk, they're going crazy. There was news about some activists taking board seats pursuing a sale. After hours, they said that they rejected it, so that one was interesting, but watch out for them. Net, they killed it on earnings, and again, a lot of these software plays, they've been doing very, very good here, and some people are getting a little bit excited about that, so definitely watch the post-earnings continuation. And then as far as TLT and the dollar, man, this is one of the lowest points TLT has been at in a very, very long time. Again, you could kind of witness the divergence here, especially when we pull the chart out, and essentially, I think if it goes here without the market reacting, or if it breaks below without the market reacting, I think that might be the trigger point to kind of make one of them converge. So we will see what happens, but I'm sure in the coming days, we will really know our signal, and it could really get crazy from here. So I hope you're paying attention to the divergence spot. That is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need to remember everybody's going to be safe if they're in the house, baby. But the code loves you. I love you. I will see you in the morning. Let's go.